This is how to get a 90% win rate, and we don't even need to guess direction. We don't care where the market goes, and we're still going to win over 90% of the time. This is exactly how to do that. Step by step, I'm going to show you the main strategy that I use in my own portfolios. So the first thing you want to do is pull up a futures watch list, and it needs the futures watch list needs to have options available to trade on them. Okay, so the broker that I'm using has a native watch list. If your broker doesn't display this list here, just copy the ticker symbols, make your own. And what you want to do is have IVR on the watch list, and you want to order your watch list from high to low IVR. You only want to consider underlyings to trade that have an IV rank of at least 30. Okay, now all futures are pretty liquid underlying, so you don't really need to worry about the liquidity too much. The main thing is just your IV rank. Make sure it's over 30. Now the next thing is you want to pick something that's going to fit well in your portfolio. So make sure whatever it is that you choose complements whatever you already have in your portfolio. If you have a smaller account, maybe things like soybeans, currencies, bonds would be better for you because they don't require as much buying power compared to if you have a larger account. You can do things like crude oil, for example. We're going to go with natural gas. It's kind of in the middle on both IV rank and in terms of buying power requirement. So it has an IV rank of 49.3, an absolute IV level of 57.2%, and this is the one that we're going to go for. I like to be around the the 50 IVR level, nothing too high, nothing too low. So we've selected our underlying natural gas, and now we want to pull up a list of expiration dates. These are option expiration dates because we are going to be writing and selling options contracts. Okay, this is one of the ways that we are going to be able to get a very high win rate. So once you've got this list up here of expiration dates, you want to pick the one that's between 30 and 60 days out in time. So there's one here, April 25th, 36 days. So we're going to open that up. And now we can see the options change. So we have calls on the left, puts on the right. This horizontal orange line shows us where the price is with respect to the strikes. We can see our expected move here with this orange vertical bar. We have our standard deviation levels with these dotted blue lines. We also have delta here. You want to make sure you have delta on your options chain. That's going to be very important. And so when you are selling an options contract, you want price to stay away from your contract. So let's go back a little bit. So if you were to buy a call contract at say the 4.2 strike, we want price to move higher, as high as possible, and the higher it goes above 4.2, the more money we're going to make. But now let's say if we were to take the other side of the trade and we sell this contract at the 4.2 strike, we now want the opposite. We want price to stay away from 4.2 and want it to stay below. Okay, so that's the kind of premise behind, that's the mechanics behind selling versus buying. So what we want to do is, if we know what the expected move is, then all we need to do is sell contracts outside of the expected move, and that's going to give us a high probability of success. So what we want to do is pick strikes that are between 15 and 20 deltas. Okay, so there's one here at the 19 delta at the 5.05 strike, and there's also a 19 delta to match on the put side at the 3.65 strike. So as you can see, what we've done is we've basically created a range for ourselves between 3.65 and 5.05, and we want price to stay within this range. Now, what's the actual likelihood of making money on this? Well, we have our pop in the bottom left corner, which is 84% right now. So that's probability of profit. So that means we have an 84% chance of making money on this trade. That's if we hold all the way to expiration, which is in 36 days time. We don't have to hold to the expiration. I personally do not hold to the expiration. I get out 50% of max profit, and our P50 isn't displayed for futures, but for equities it always is. But basically your P50 is going to be about 10 to 15% higher than your pop. So we're going to have an over 90% chance of success of getting out of this position at 50% of max profit here. Now let's look at the actual numbers. So we would collect $1,590 upfront in premium as soon as we open this trade, and our buying power requirement is going to be $2,556. So we're going to collect 1.6 and we're going to put up 2.5. Okay, so as you can see, we are getting a very high juicy return on capital here, over 50% return, and this is in 36 days, and we've got 80 plus percent chance of success here, regardless of whether you want to hold till expiration or get out early. I personally always get out early. Now, let's just say you wanted to reduce your buying power requirement. Let's say you wanted to increase your probabilities even more. Well, what you can do, and this only works for futures because it uses span margin, you can be more conservative and move your strikes further out of the money. So let's just say you go to the 10 delta on either side as opposed to a 19 delta. So we've got 10 delta on either side. Now we've made our range wider. So now our range is between 3.4 and 5.6. And what that's done is it's increased our pop to 93%, and our P50 now is going to be well over 95, 96%. So we are going to win this trade almost every single time. Okay, now we do obviously collect less premium up front because we're taking on less risk. So now we're collecting about half as much premium, 750, but now our buying power requirement has also reduced down to 1.8k. So this is how you can sort of play with and manipulate positions to fit inside your portfolio. Just make sure that the numbers make sense, and then you want to have as many occurrences of this as possible, so that you can eliminate any short-term variance. And you want to have a smooth P&L curve. So you want as many occurrences as possible, and this is basically the entire trade setup. So you do need to make sure that you are keeping your buying power in check, and we have created a free position sizing template that's available for everyone to use. The link for this is in the description. The way it works is you just enter in the size of your portfolio. Say if it was 25,000, you enter that, and then you enter in whatever the VIX level is. So say if it was 12.8, and then as you can see, everything is calculated for you. You just need to follow this to form the backbone of your portfolio. If you have a smaller account, then you may need to be more aggressive. If you have a larger account, then you should not be violating these guidelines or rules. And as long as you don't, you'll be absolutely fine over the long run. If you do want to learn in more detail about what we do and how we do it, click on EDS Premium, get yourself signed up. The link for that will be in the description as well. Once you're inside, you will have access to one of our portfolios that will allow you to see the positions that we place, how we manage risk, how we make adjustments, everything in real time. There's also a full course, so no prior knowledge is required. We will teach you everything that you need to know. And it is a private community, so if you ever get stuck, you can simply just speak with myself directly or with other like-minded individuals. And there's a 100% money back guarantee. So after 6 months, once you've been through the course, follow some of our trades. If you're not profitable, then we will work with you for free until you are, or you can just request a full refund. So it's completely risk-free. It's $9.99 a month to join right now. The price will be increasing, but once you're in, the price is locked in for you, so you are rewarded for getting in early. The aim of EDS Premium is to teach you the skill. We don't want to keep you dependent on us. We want to give you the skill so you can take it with you for the rest of your life. No one can ever take it from you, and we aim to get you to that point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.